Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The US dollar has gone on the counterattack thanks to the Fed's reluctance to cut rates and support from the White House. The US and China are preparing for trade talks, and Donald Trump is announcing a deal with the UK. Rumors are circulating in the market that the president will loosen Joe Biden's restrictions on trade and artificial intelligence chips. This allows the S&P 500 and the USD index to spread their wings. Jerome Powell argues that the US economy is strong, which gives the Fed time to keep rates at 4.25 to 4.5%. The central bank is worried about inflation accelerating due to the rates, while its counterparts from other countries fear slowing economic growth. They intend to cut rates, and the divergence in monetary policy plays into the hands of the US dollar. Nevertheless, the derivatives market still expects 3 acts of monetary easing by the Fed before the end of 2025. The reason is likely to be a cooling of the US economy, which will hit the dollar. For now, until the end of the 90-day initial pause before tariffs hit, the Fed has no reason to cut rates. At the same time, a break of the resistance at 100.3 will increase the risks of a pullback to the downtrend in the USD index. The 13% rally of the S&P 500 from April's bottom levels made stocks expensive again and increased the likelihood of renewed capital outflows from the US to Europe and other regions. However, Citigroup categorically does not recommend getting rid of US securities. At the same time, JP Morgan believes that the broad stock index has a better chance of rising towards 6,000 than going into a deep correction. They say that the easing of trade tensions, the bullish sentiment of individual investors, and corporate reports that beat forecasts will allow the S&P 500 to continue its rally. Whereas the Fed previously helped US and global equities with its rate cuts and balance sheet expansion, the broad stock index now has a different ally. Donald Trump and his team are doing everything they can to convince investors that trade tensions are easing and that tariffs have peaked and can only go down from here. This fuels market greed and the desire to join those who have bought back the failure. In such an environment, only a significant deterioration in US macroeconomic statistics will revive fears of recession and put barriers in the way of the S&P 500 heading north. Gold came under pressure following the Fed's reluctance to signal an imminent rate cut and the announcement of a new trade deal between the US and UK. Although details remain limited and will be worked out in the coming weeks, the agreement signals a shift toward improved global trade relations. This has boosted investor risk appetite and weighed on safe haven assets like gold, which tend to lose appeal when market uncertainty declines. The derivatives market does not expect the Fed's monetary expansion cycle to resume until at least July. Jerome Powell believes that the US economy is firmly on its feet, and in such conditions, bulls on gold feel out of place. China continues to buy gold for the 6th month in a row, increasing its reserves by 1 million ounces, equivalent to 30 tons over the period. Beijing is going into talks with Washington, but is preparing a plan B if they fail. The apparent calm in financial markets is rather fragile. Investors have come to believe in the de-escalation of trade conflicts, but there is a low probability of a breakthrough in US-China talks. Bad news from the meeting in Switzerland will make investors turn to gold again. For now, a successful assault on the support at $3,310 per ounce will increase the risks of a correction to the uptrend in XAU-USD. For the first time since February, Bitcoin surpassed the psychologically important mark of 100,000. Growing investor enthusiasm for massive trade deals and the reduction of draconian US tariffs fueled demand for risky assets. Investors are weighing various scenarios. HSBC believes that duties on US imports against China will fall from 145% to 50%. Morgan Stanley predicts the White House will set a 90-day delay. The increase in demand for cryptocurrency is also due to an update to the Ethereum blockchain. This update aims to lower transaction costs, reduce network traffic, and make it easier for users to perform more complex tasks. The second largest token has been losing ground to Bitcoin since the beginning of the year, but has been outperforming it in the past few days. The 100,000 mark could be a red line for BTC-USD. Round numbers tend to lead to profit-taking and consolidations, which helps us understand whether Bitcoin will linger at this level or not. According to Deribit, the world's largest cryptocurrency derivatives exchange, activity in call options is concentrated near 100,000. The key event of the week to the 16th of May will be the US-China talks. Investors will be catching any information on how it's going. De-escalation of the trade conflict will further fuel risk demand. Conversely, disagreements will force investors to seek salvation in safe haven assets. For now, the gulf between Washington and Beijing looks insurmountable. Donald Trump wants concessions, and Xi Jinping wants the removal of the 145% tariffs. the White House is certain to continue fueling investor appetite for U.S. stocks by claiming progress in trade talks with other countries. Following the UK, India, Japan, and South Korea may sign agreements. The main events of the economic calendar will be the releases of U.S. inflation and retail sales data. These will allow us to understand whether the U.S. economy is as strong as Jerome Powell says, and whether consumer prices have started to accelerate because of the tariffs imposed by the White House on America's Liberation Day. This will clarify the Fed's stance and have a direct impact on financial markets. Stay tuned to Pro News Weekly for more updates on global markets. Like, share, and subscribe.